Hello everyone, hope you're doing good and welcome to our YouTube channel. And today we are going to discuss what are the stages of startup funding and when should you opt for a funding in the market. So, as per the research conducted, the funding is one of the most important criteria for a growth of any startup. You need to understand where you're currently standing today and what kind of funds you need to raise accordingly so you can go a notch ahead in your business journey. So let's not waste the time and understand what are the various stages and what are the valuations and the other aspects. So today we are going to discuss what is a startup, what are the startup facts in India, why startup requires funding, and what are the stages of various startups funding. So what is a startup? According to Investopedia, a startup is a young company that is beginning to develop a new product which has a unique solution to a complicated problem, which can be an efficient way to deliver a product or to deliver a service. Let's take an example. Let's take an example of Flipkart. That was a young company. It has a unique solution of providing a home delivery of goods. Okay, it erased a complicated problem which was returning products and services for an online business delivery, and it managed the distribution system so well that we can today buy goods in a particular day. So yes, Flipkart is a startup which has a proposition of all these aspects. So there are various definitions of startup, but for you to understand a broader definition what startups is, this would really be helpful. What are the Indian startup facts? India is considered as the third largest startup ecosystem in the world, and around 1,300 new startups were born in 2019, which implies that 2 to 3 startups are born every day. India has a young population, and the people are driving towards an startup gig. It's called more people wants to start their own venture, uh, risk and learn more stuff into their startup journey. And it's very exciting journey, when you hear people talking about startups and everything. Uh, so yeah, 40,000 jobs are created in startups every year, and as of today, there are 1.6 to 1.7 lakhs jobs being created. Mostly the startups are into finance industry, insurance, and real estate sector. So you have any unique idea which are not part of this industry that would be really helpful and you can grow your startup really well. So, so now the next question is, what is the kind of funding available to a startup? Funding is considered as one of the most important factor for growth of any startup. So you need to understand where is your business currently standing at and what is the appropriate kind of funding. So the various stages of funding are your pre-seed money, then there is a seed capital, then there is and angel investors, then there is your series A, series B, series C, and there is an IPO. So you're going to understand each and every in detail. So let's get it started with pre-seed funding. So what is pre-seed funding? Pre-seed funding is commonly known as a bootstrap funding. So this is the funding which normally a founder or the co-founder along with their friends and family invest in a business. What would be the stage of the business in a pre-seed money? So it's when you're exploring a product, when you have a unique idea proposition, you're developing the market, you're understanding the market. So the money would be required to develop your initial product. Who are the potential investors? So basically, the potential. So your potential investors are your startup owners, friends and family members, and your relatives. Okay, so during the pre-seed funding stage of your business, you would require close to around 10 lakhs to 30 lakhs of a business money. The next stage is the seed funding. Seed funding is when you're planting up any seeds and you expect the seed to grow. So the money required to plant that seed, that's called as a seed funding. So the stage of the business would be you are at an advanced stage with respect to your product development and with respect to your marketing team. So you're launching your product, you have got a decent amount of traction, and revenue has started to build in. You're right now expecting to hire a team, your product development for the market. So who are the potential investors? So angel investors and micro VC and crowdfunding. So these are the potential investors. So crowdfunding has gained decent amount of traction, wherein you can showcase your product, and if general people are crowdfunding are interested, they can invest in your idea as well. So normally the approx funding in seed funding goes around 1 million USD with a valuation of approx 7 to 10 million USD. Next is a Series A funding. So this is the first round of an VC funding. Okay. So earlier where more of your angel investors wherein your family members and your friends were interested, but Series A is very professional game wherein you are reached at a very advanced stage in terms of revenue, in terms of your product development, and this is the place wherein you will give your equity to the investors. Series A is considered as a benchmark in terms of your startup particularly. What is the startup stage for a Series A funding? So you have a working business model, you have your revenue in a places, you have your expenses, you have a scalable model with a decent hold on your market. You have your team in a places in terms of your development team, marketing team, sales and advertisement team, and your product team as well. And you have a scalable market blueprint. So you understand that if you raise this amount of funding, you'll be able to scale your market aggressively. Who are the potential investors? So VCs are definitely the kind of investors which invest in a Series A kind of an investment. And then we have an accelerators. What is the average funding? So 13 million USD is the average funding with a valuation of around 22 million USD for the company. See, particularly this funding may range according to the business and to the requirement, and but this is the approximate range of funding VCs normally look at. Next comes is a Series B funding. So this is an advanced stage to Series A kind of a business model wherein your startups grow and to meet your demand. So you require funds to meet the demand of your customer. This is the stage wherein you're scaling up, you're identifying new markets, new customer targets, and you're beating your competitors. And you need money to build your high quality team. So who are the investors in a Series B? So it's a VCs and a late stage VCs would be particularly interested in a Series B transaction. So Series A and Series B, the difference would be you need higher money to acquire a larger market and to get a better team. And approx funding is 32 million USD with a valuation of around 58 million USD. Next come is the Series C funding. So this is the stage wherein you have excel in terms of building of a product, you have excel in terms of market, and now you're looking at to acquire a startups. So why do you want to acquire a startup? Because at one point of time it's difficult to launch in a new market or scale up in a new market, and you acquire a startup who has already done that. That is really helpful in terms of saving of time, in terms of in cost and expertise with respect to the particular startup. So what are the startup stages for Series C? So either it's an expansion mode, or you want to go towards an IPO stage, or you have to increase your market share. So normally the investors are your VCs, private equity firms, hedge funds, and a banks. So banks particularly would like to come to Series C because there's a lesser risk. You have proved your product, you have proved your market, and you have revenues flowing up. So approx funding of 55 million USD with a valuation of around 115 million USD. Next is an IPO stage. IPO is the stage where you're offering. So in all the previous stage, you were offering your shares to the private investors. In IPO, you are offering your shares to the general public. So startup stage wherein your growth oriented team, you have stable financial statement, you have good corporate governance, and you have a positive market sentiment. So just like how Snapchat got into an IPO stage with raising various rounds of funding, how Uber got into an IPO stage. So next in Indian ecosystem, maybe you will see a Flipkart would like to go towards an IPO stage. So that is an IPO stage wherein shares are available for the people to trade. And so, what are the benefits? Why would companies would like to go to an IPO stage? It practically it helps company to retain a good amount of clients. It increases their brand awareness, and also it is very important to hire a decent amount of team. And once you go towards an IPO stage, it says that you are a well proven company and you can attract a good amount of talent as well. So the investors are your general public and your institutional investors. So these were the various stages of funding. Let's have a quick recap. One is your pre-seed investment, which is called as a bootstrapping, wherein you are at a product development. Then there comes an angel investment, which is you get money from your friends, families, relatives to test your product in a market. Then we have your seed money, which is Series A, to help you expand to the market, then Series B, and then Series C, and then the IPO stage. So, how much money has to be raised in a round? So, according to Paul Graham, who is the CEO of Y Combinator, he came up with a magic number, an approx number, maybe how many people you want to hire. So, you have to multiply by $15,000 into 18 months. Okay, that would give you an approx range of money you would require in a round of money. As simple as that. How to get seed money? Okay, so that's the question I get from a lot of my friends or from my clients. So normally to get a seed money, you have to follow this three classical F formulas, which is fools, friends, and families. So that's normally who invest in your seed investment round. I hope you like this video. Do let us know in a comment box below what are your views, and are you looking for any kind of an investment opportunities. Thank you very much. It was lovely having interaction with you.